and welcome to the Cache Metal Market Overview. I'm Jasmine Bowen, and you are listening exclusively for AM 640. Every week on Thursday at 7:05 p.m., we will be bringing you news from around the globe as it affects our economy and the precious metal market. Joining us again is Robert Rosenzweig, CEO of Cache Precious Metals. Now, Robert, what is in the news this week? There's been a lot of stuff happening over in Europe affecting the economy, so tell us.
Hi, Jasmine. Much of the same, to be honest with you. Countries still requiring money for bailouts. They haven't come to the table yet to ask for it. And Germany has come to the realization they're going to have to shell this money out, and they really don't want to be honest. But to bring this matter closer to home, it's earnings season time in the U.S., and there's two particular companies I want to focus on that are true indicators on our economy, Dow Chemical and 3M. Both reported okay earnings, but were rather skittish on mentioning future earnings in result to what's been going on with the economy right now. I'm bringing this to the attention only because gold has been sputtering. People have been wondering whether the Fed was actually going to follow through with this QE3, and they put those rumors to rest yesterday when in the minutes they said they were actually going to do as such. I mean, this is a true indication that things aren't as good as people think, and I don't think they're getting any better. When it comes to gold, another reason that gold has been sputtering, the biggest buyer in gold has been on vacation, and they're going to be on vacation for the rest of this week and the beginning of next week. So I really look at this as a tremendous buying opportunity.
And that's a good segue into today's theme, which is understanding gold better and how to invest in it. Now, Robert, there are two types of investors in gold. There's a short-term investor, buy, sell, make a profit in and out. And then there's the long-term investor, 10, 20 years down the line. What do you at Cache Metals recommend?
There's been tremendous volatility for short-term trading. I've yet to know anybody in over 2 decades that has ever been successful at it. I do know one. Maybe we'll be fortunate enough to have him on the show. But gold is a longer-term play. It is something you put away for 10, 20 years. All the big money that buys gold does that. And I would strongly suggest that you should always have 10 to 20% of the physical metal in your portfolio and never really get influenced with the peaks and troughs in the price of the metal.
Now, you mentioned the price of gold has been very volatile over the past few years. Can you explain maybe why that's happening?
Well, in the past few years, it was concerns over the U.S. currency, debasement of the U.S. currency. There's a big debacle still going on in the euro, whether the euro will survive. And then you've got the strife in the global banking system. So people have been seeking a currency that they can cling to, and gold has been that currency. It's been that hard asset. It's simply been insurance.
Now, do you think the rise in the price of gold over the long term will exceed the rise in the price of the stock market?
In the last 10 years, percentage-wise, it has. And with what's going on out there in the world today, I've said this before, it's been the best producing asset class this past decade. I really believe that trend is set to continue.
Now, the price of gold has changed very much over the past 20 years. In 1990, it was at $615. And then in 2009, we went to $972. And now in 2012, we're at $1,760. That's a big difference. So if I were to buy, say, 10 ounces of gold now, what do you think the price of it would be 10 years down the line?
That's a difficult question. Any analyst out there with a screen can easily say 10,000. What I will focus in saying, and not to really evade answering it, you've got debt in the U.S. that has tripled this past decade. You've got the credit system that's nearly doubled in debt. The only way they're going to combat that is printing money. So that being said, the macroeconomic conditions are very gold positive. I really strongly would recommend that you always have 10 to 20% of your money in the precious metal itself. And at Cache Metals, we really believe that the price of gold is going much higher. And for any questions that you would have whatsoever regarding precious metals, feel free to give Cache Metals a call. We are the experts in this industry. It's all we do.
Well, thank you very much for joining us today, Robert. This has been Robert Rosenzweig, the CEO of Cache Precious Metals. You've been listening to the Cache Metal Market Overview every Thursday at 7:05. I'm Jasmine Bowen, and I will see you next week.